Mark, what are you looking for later this week from the tech sector?
Well, clearly we have an earnings-driven week. Like you said, every week seems to be very important. This is no different. We've had a decent earnings calendar and decent earnings reports to date, and I don't expect that to change. I think this is more about sentiment than actual reports, because I do expect these reports to be good. And I think going into the fourth quarter, you will see some more announcements about tech IPOs, and tech will lead the way, and I still think that is the growth engine that will take us into 2019 going forward.
Well, Mark, let's get to the IPO pipeline in just a little bit. I want to start and stay with the earnings just for a little bit. Netflix did what the bulls wanted Netflix to do last week. Then the stock finished lower by around about 2%. Is the earnings enough?
Right now, it's not. I think right now you have sentiment that is driving the day. Like you said, in previous quarters, that would have taken the market and taken the stock a lot higher. Right now, sentiment is the wrong way. I think we've seen a little bit of rotation as the fourth quarter has begun out of these stocks. If you continue to see these earnings reports that are that good and the visibility that the companies are guiding to being that good, I think you will still see this sector take the market higher. Let's not forget what the stock has done year to date and for the last year, and to see a little bit of a hiccup here, even after a stellar earnings report, is not too surprising. Let's watch as third quarter reports come again this week with Amazon and others, and we'll see what goes on. But right now, I think sentiment has definitely turned obviously negative.
Julian?
Yeah, so we've seen a trend whereby if you beat on earnings and you beat on revenue, but you don't give any guidance, your stock gets punished. Mark, I'm just wondering, as you look towards earnings this week and into the rest of the season, what do you expect to hear companies saying in general about 2019?
You know, there's been muted guidance, I think, by companies because I think they've purposely been cautious given what's going on the trade, given what's going on politically, and given what's going on in Congress. These companies have all been afflicted by a specter of more regulation, and I think there's no sense that they can have upside if they give very rosy guidance. I think they're very much in a wait-and-see mode. You see Facebook, obviously, is much more concerned about security and is investing deeper and deeper into that. I think companies are very tempered in their guidance. I think they're going to let the results speak for themselves. And I think as we go into next year, we see what happens with the election. More and more of that visibility will shine through, and I think the stocks will go higher after that.
So, Mark, going into next year, let's get to that IPO pipeline. When we hear that some banks are pushing for the likes of Uber to go public, there's a narrative that quickly builds that the window is open for now, that the window closes at the end of next year. Your thoughts on how important the pipeline is at the moment, how strong it is, and whether you see it lasting beyond 19, and whether you can predict that at all?
Well, it's hard to predict, obviously, and windows open and windows close very rapidly. Right now, the market has been very, very receptive to IPOs. Even last week, with all the volatility, we had 7 deals pricing, raising over $1 billion. Clearly, the buyers have a better chance to get pricing that they desire as opposed to weeks and months past that have been much better. Right now, it's priced for the buyers. Going into 19, I do think you're going to see these highly visible companies like you described with Uber and others go public, access the markets, and give credence that the IPO market will stay open, and I think 19 will be a very good one. And I do think that you're going to see some of the bigger names go public at terrific valuations. The thing that I fear is some of the more volatile names, like in healthcare and in the biotech market, where we've seen a lot of capital raising. That has become a path for decent capital for some of these companies. That window will probably close sooner than the other windows for technology, and that's the one that you should really pay attention to, because tech, I think the receptivity is going to continue through 19 and 20.